across the planet and talk to our good friend Peter Davies, JigsawTrading.com, and we'll talk to Peter. And we do have the visual presentation. So for our guests, the link that I just posted in Squawk Radio Room, click on that. That's going to get to Peter's charts, and let's give him a call here. Good day, sir. Good day, Mr. Bond.
Top of the morning to you, Eddie. How are you?
Top of the morning to you, my friend. What do you got? Like you got some Guinness?
Yeah, I got a pint of Guinness here. It's kind of sent me a bit Irish, I think.
Really? I know this morning you lots of comments going on in equities. You're talking about this range we're looking at right now. Are we still in it?
I don't know. I had to flip to my long-term charts for the first bit of our chat, so I guess we'll see. It looks like it, 59.75.
Well, I do see that we had some decent volume here right on. At least my first line of resistance is 60.50s, pulling up about maybe 23,000 contracts around.
Yep.
Topped out. You know, earlier today, or actually on that first move when we got back on the bull, S&P sort of took over the leadership role just for a little while, but I think NASDAQ and Dow are sort of fighting it over right now. But if you would like to, please click on that link. It's join.me/TopstepTrader to see Peter's charts. And what else we got going on here?
Okay, let's just look at the long-term charts first. I think the first thing we should look at is just have a quick peek at the weekly chart. Because if we look at the weekly chart here at the bottom, already this week we've kind of made lower lows, which you see 6 weeks of higher lows. So we're kind of a little bit on the bear going into this week. Last week, you know, we'd had a pop up. Last week was kind of starting to look a bit bearish, but it was Thanksgiving week and it was a holiday, and I kind of find that in those holiday weeks, when you look at the prior weeks for clues what's going to happen, because of the low volume, it tends to be a bit misleading. But anyway, the weekly, that it does show the first lower low, so we could have a down week this week. So as I say, it's a holiday week last week. We came back yesterday after the holiday, average volume about 1.4 million. So again, you know, we had a down day, but it wasn't a huge sell-off, wasn't a lot of participation. Where we are now, obviously, we're at new highs. Yeah, we've come off a little bit. We still don't really have any decent reference points, you know, areas to play off. Obviously, if we come back down to 1960, you know, the 1900s, lots and lots of reference points, prior action we can play off. So right now, not many. So really trying to get a feel of what's going on, trying to ignore last week's action. You know, we're working up back into the highs, but looking at those highs that we're working back into, it's kind of from a sluggish time. So again, probably not the greatest reference points. Overall, we've had a big mover, and usually after a big move, or any kind of move, not really a big one like this, we should move, consolidate. So what we've got our eye on now is obviously, okay, we're coming up a bit. Maybe we're going to consolidate, possibly to the old high, which is around 2017, would be interesting. But just looking, and then once we do start to consolidate, we've got a line here 2027. Then we can actually take some more reliable trades where the market will do what it's done in these boxes that we've got on the way up, where the market will move quite kind of predictably within its range, and we can get some more predictable trades. Right now, I think it's a little bit unpredictable. If we look below us, we've got a level here at 2054, and basically all that level was basically we hit a high, came off, and then kind of hit it from the other side. So that's kind of what I'd say is a really, really tentative level, because it just, it's just that one day that we hit it from below, and we can above and below, and we can see, looking out to the left, 2054. It's not really, market's not reacting to it. I mean, it's a bit of a reach to say it's reacting to it because of what's happening here, ranging around it. So I think that level might have to come off. So looking below, it's really this 2675 area that's next level below us, where we tested a few times. So if we come down to 26 75 and then bounce up, I'll say, well, we've got a good chance of that maybe being a range low for a while, and then maybe doing a 2026 to 2070, 2080 range for a while. So that's what I'm looking at. Obviously, with this big parabolic move up, it could just come straight down again. But there's just been no. I think it's a bit tough to be bearish now because the market just doesn't want to move down at the moment.
You said it's not looking bearish. The market doesn't want to move down a bit. Do you see us stretching all the way to the 75 quarters again, or 75 evens, 76, 80s?
I can't see why we can't be at 2100 by Christmas at all. I don't see any reason. It's just a relentless march up. So, I mean, everyone was saying 2050 by the year end, and then 2 weeks later we're there. So I think if you're going to be a pundit, you should shoot for the stars and say 2200.
Oh, what the hell, Wayne?
If you're going to practice punditry, you might as well shoot for the stars. But yeah, it's just relentless marching up. I mean, it's hard to make any sense of it from, when you go into the shops and seeing what businesses are open and stuff like that. It's kind of hard to make sense of the market just moving up 5% at a time every month. But that's what it's doing, so that's all we can play, right?
Well, it's been mentioned just a lot here recently about the so-called Santa rally. Every market has that. On the trading floor, it was always talked about, and most of the time it would play out. You would see a nice big rally in the month of December. So that's something that we have to sort of watch for, and if we want to put the name tag on it for Santa Claus. Until we do see some of these higher highs, I think we have to just sort of sit back and wait. But Peter, Bob's got a question for you.
Yeah.
The question was when a new trader starts tracking order flow. All right, what's one of the biggest mistakes the newbies make when starting with order flow?
Over trading usually, because it gives you a lot of signals and. You should only take those signals at certain times. So, for instance, and we'll go more into the order flow today in a second, but basically one of the things that I tell people, a lot of people look at iceberg orders, and when a market's moving up, the ES will swing up 10 points and swing down 10 points, swing up 10 points again. An iceberg order won't stop one of those swings, but it will stop a pullback. And that's just a general rule. But people kind of say, well, an iceberg, I can see it. I've never seen that before. Let's trade all of them. And that doesn't work out so well. And go on, sorry.
Ask you real quick for some of the newer people here, newer traders. Iceberg. Can you explain an iceberg besides the one that the Titanic hit?
Well, it's a bit like the one the Titanic hit. It's basically when somebody's showing a limit order of like 500 contracts, and then 500 contracts trade, but there's still 500 left, and then another 500 trade, and there's still 500 left, and then maybe 3,000 or 4,000 contracts trade into a level. But we're still showing 500 on the limit order side, and it's just basically they're refreshing that limit order as people trade into it. So it's just like a hidden order, basically.
Sort of like a bad rash, something you can't get rid of.
It's great. It's a great thing. It's a wonderful thing because if you can see it, it gives you a hint about somebody stepping up to the plate. But there is a lot of things going on in the markets, like statistical arbitrage strategies, where what you're seeing happen on your market is only half of the trade. So somebody might step up and buy 5,000 contracts, but they might at the same time be selling a basket of stocks or selling the SPY ETF. So basically they've got no directional bias. Don't care where it goes after the trade. They only care that kind of divergence between the futures and the stocks comes back in line. They exit. So you've got to be a bit careful about reading too much into this stuff.
Is Bob, was that the wrong answer? You just went,
No, I was going to say, can we get back to today? Because I just want to go through a couple more things about it.
Sure, by all means.
Right. Anyway, Bob's son, it's always good to hear a question from my Japanese friend. Where we are on the weekly profiles, we've got 3 weekly profiles here. This is last week, obviously, this little one up here, the Thanksgiving week, and then the week before. So where we are now, we kind of got this distribution. We've got a lot of distributions from the week before. We've kind of come down to this level where it widens out on the profile, which is about 48.25, and then we've got this level up here, which is 64.50. So basically, we're kind of between those two spots at the moment. So again, you might say, well, that's a pretty tentative area. It's not really much going on there, just that little step in the market profile. And of course, yeah, it is very tentative because we don't have a lot going on in the market because we're at new levels. So yeah, so again, 48.25 is one to watch for going into today, and also 46, 64.50, and then going over here, we can see on the split profile, this is basically today's day session, last night's Globex, yesterday's day session, Sunday Globex, and we can see basically we're going sideways in the pretty much same area between those two areas. So basically we've got a bit of a risk here. If we don't actually get breakout of this and we come back down, we could end up staying in this area all week. Maybe a late Thursday or Friday breakout. And let's just move over to today, and we'll look at some order flow, which is kind of what we're here to do. Okay, so first thing today, we've moved up and we built all this volume, as Eddie was saying earlier. 59.50 to 60.75. There's a ton of volume there. Looks like over 100,000 contracts. What we always say in these situations, basically, you move up, you build volume, you move up, you build volume, you move up, you build volume. That's how the markets move. So right now, 59.50 to 60.75. That's an area on the volume profile. Lots and lots of people positioned there. Okay, and what that means, lots of people are positioned there. They don't want to lose money. That's the one thing it means. But also, if it actually starts to break either side, we'll see the market zip away fairly quickly as people bail out. So obviously, since we've been chatting, I think it's gone down to 58.25, but not a ton of volume right now. So it looks like they're still kind of holding on to it. So when you get these ranges like this, what do? Got a couple of choices. If you're long biased, you buy 59.50, scale off at 60.75 and hold some for a runner. If you're short biased, you've got two things you can do. You can sell 60.75 and then scale some off at 59.50, or you wait 59.50 to break and then watch as it comes back up to this old level. So basically, we'd be watching now for sure. You're actually watching now 59.50 where all this volume was. You're watching this and you want this to hold. Now, if this holds and you start to see sellers come in, that's where you take a short. Because basically, the theory is that if you've got 100,000 people positioned here and the longs get stopped out and we get a push down, which it doesn't look like they've done based on the volume, then basically when we come up to that level, the longs won't go long there again because that's where they lost last time. Okay, but what we don't seem to be seeing that right now. What we seem to be seeing is a little bit of a probe down without a lot of volume. So we still haven't really seen a sign that these guys have got out at the moment. So the next sign to look for, if those guys haven't got out, is basically when you're in a range and it's going from one end to the other, usually when it extends down 58.25, you're going to get a similar extension upwards. So you could actually just get an extension here for 62.50, and that's still just be the range doing at the top what it did at the bottom. So what you're going to look for now as it gets to the extreme, you're going to look for this high volume area to hold. So the 60.50, the 60.25 area, it should be able to get past that to the other side of the range and push out. And again, if it can't get through this high volume area, again, if you're long, so if you're long 59.50 because you think it's going to go upwards and you can't go through the point of control, this high volume area, that's another sign that you really don't want to stick with a long trade. So basically, it's kind of open. It's open really, whether you go long at the bottom or short at the top. I think basically I wouldn't short the top personally. I would actually wait for it to break down and short 59.25 if it came back. But the good thing about trading in these kinds of areas, if you short 59.50 or maybe wait for it to take a little run down again. Sorry, if you go long 59.50 or just below, you don't have to wait a long time. You don't have to let it move down 57 to know you're wrong. You should know you're wrong fairly quickly. So basically now what we're watching for, see if we get an extension upside. It should break. It should break at some point with all of these contracts trading here. So again, for the upside, if you're not brave enough for 59.50, because obviously we've had an extension down to 58.25, then you wait for it to take a run up. Now, if these guys at 60.75 get stopped out, it should run really to 63.25, 63, 63.25. And if it does, it should also come back and test. Most of the times it will come back and test this area, and you can take a long again. So you don't have to get long before it breaks. You can let the market show its hand. Because basically these trades where you fade the extremes, they're good trades, but you don't want to be fading the extreme the 10th time round. So this is a good example to that. That's why I said that basically I hope we're still in this range when we get get into the room today, because basically this range, this volume, this is real people with real positions on, and real people that are going to feel pain. And if we pop up to 63, get back down to 60.75, the guys that the shorts that got stopped out before will not want to short it again. And that's something you can use to your advantage. So that's about it, Eddie. I don't know which way it's going, but I kind of know areas where the opportunities are good and areas I'd like to see it come back to, and there's a good chance that it'll hold. But right now, I think it'd be really tough to say this is a top or this is a continuation, especially after how many times it's hit the top and the bottom of the range.
Oh, yeah. No, I'll agree with you completely right there. Just sort of watching it right now, seeing if it wants to even test these 6150s, sort of just lingering around that first line of resistance, 6050s. So trading above, below. So we'll see if we can have a change of pace here. But Peter, we got a lot of new people here, a lot of guests with us this morning, and I'd like to say good morning. This is Peter Davies of JigsawTrading.com. Peter, I'm going to put your website link in the Squawk Radio Room. Could you just give me a quick explanation of the JigsawTrading.com website?
Okay, so Jigsaw Trading, basically we sell software that helps you read order flow, and basically that's what you can see on the right hand side of my screen there. If you want to know what that's all about, basically, or if you're interested in reading order flow, even if you don't want to use our tools, we've got a really good education page. It's all free. There's a course on there called the Order Flow Foundation course that goes through all of the popular order flow tools, tells you what's good about them, what's bad about them, the pros and cons, basically. There's not I shouldn't say what's bad about them. They've all got kind of different perspectives. So if you're interested in looking at order flow and using this concept of, where are people positioned, are a lot of people hitting into a price, is there a guy with an iceberg order there, take a look at that website. And as I've said before, Eddie, there's a couple of prop shops. There's some prop shops in Australia and Singapore that actually use that Order Flow Foundation course in the training for their interns. And as I told you before, Eddie, I know this is true because the MD at one of the prop shops actually sent me a picture of one of their interns asleep in front of one of those video courses. So it's enthralling stuff.
Right. Well, you know what? I'm thinking that he probably made some big money and, just sort of took a You're entitled.
It was Australia on a Friday lunchtime. Anybody who's worked in Australia on a Friday, in a Friday afternoon will probably appreciate why he couldn't stay awake.
Well, what was it? What do you have What do you have? A 6-pack of Fosters?
I imagine it involved a liquid lunch.
All right. Well, there's the link posted right there if you'd like to take a look. And, of course, every day we do have Peter's pre-morning S&P prep. So if you log on, you'll get that here in the Squawk Radio Room or in the Equities Room. And comments this morning from Peter in the Equities Room. Little conversation with some of the traders here. But wasn't really doing much this morning. I tell you were looking for the worms, and I mentioned eat dirt.
Yeah, it was kind of early on. I like to come in early on and have a look, but it's just not my trade. It's just not a time I can trade. It's like having a wife, these markets, and when I know who I'm married to when 9:30 comes in, but before that I kind of feel it's all a bit vague. But in the pit session opens, that's kind of the sweet spot for me.
All right. Well, sweet spot, wife, it goes hand in hand. But, Peter, appreciate it. I'll get you back here on Thursday. Same bad time, same bad channel.
Absolutely.
All right, my friends. Appreciate the insight and the sharing of the charts. But otherwise, trade well, and we'll get you back here soon.
Okay. See you on Thursday, Eddie.
Thanks a lot, Peter. Take care.
Okay. Bye.